Most people never buy their first stock for one simple reason. They think investing is complicated. Scroll stop. But here's what's weird. Buying a stock today takes less than 30 seconds. Contrarian snapback. The real danger isn't picking the wrong stock. It's accidentally breaking rules you didn't even know existed. A beginner can buy a stock on Monday and have their account restricted for 90 days by Wednesday. And most investing channels never explain why. Today, I'm going to show you the complete 7-step system behind buying your very first stock, from choosing a company to avoiding the mistakes that trap new investors. Why this matters. Retail investors now control trillions of dollars. They account for over a third of daily stock market trading. For the first time in history, Americans hold more wealth in stocks than real estate. But despite all this access, most beginners only see the front end. Open app. Deposit money, press buy. What they don't see is brokers, market makers, clearinghouses, settlement systems, federal regulations. And understanding these hidden layers is what separates confident investors from frustrated beginners. Transition. So before you buy your first stock, let's follow the exact path your money takes. Understand what you're actually buying. Expectation. You're buying a ticker symbol. Reality, you're buying ownership in a real business. Explain. C Corp structure, shareholder ownership, voting rights, common stock. Key insight. Most beginners look at stock price. Smart investors look at cash flow. Introduce. Cash flow statement. Why profit can be manipulated. Why cash is harder to fake. Rehook. But even after choosing a company, you still can't buy anything until you choose the right account structure. And this is where many beginners unknowingly create future problems. Choose your brokerage architecture. Cash account pros, simpler, lower risk. No borrowing margin account pros, increased buying power cons. Margin calls, forced liquidations. Additional regulations. Story. Angle, imagine borrowing money to buy stocks, then waking up to discover your broker sold your shares without asking. That's a margin call. Rehook. But choosing an account is only half the battle. Now your money has to enter the financial system. And surprisingly, this is where many violations begin. The hidden journey of your money expectation. Deposit money. Start investing. Reality money enters a clearing process. Explain. ACH wire transfers settlement. Holds visual concept money travelling through checkpoints. Introduce free ride violation simple beginner example. Consequence 90-day restriction. Rehook. Most beginners think the hard part is over once money arrives. Actually, now comes the most important decision of all. What do you buy? Stocks versus ETFs. Big question, should beginners buy individual companies or buy the market itself? Explain individual stocks, higher upside, higher risk, ETFs, diversification, simplicity, unexpected insight. The S&P 500 looks diversified, yet a handful of giant tech companies drive most of its gains. Modern market reality, AI boom, mega cap concentration sector, leadership, rehook. Now you finally have money and finally know what you want to buy. But pressing buy opens another hidden system. What happens? When you press buy, expectation order goes straight to stock exchange. Reality, not always. Explain, order, routing market makers. Liquidity providers introduce Citadel Securities, market order versus limit order examples. Comparison buying concert tickets during normal demand versus buying during chaos. Rehook. But even after your order executes, the trade isn't actually finished. Most people don't know that. The T+1, reality reveal. You don't officially own your stock the moment you buy it. Explain trade, date down arrow settlement. Date why T+1 exists. Reduce risk. Verify ownership. Move cash. Introduce. GFV easy. Visual example. Consequences: warnings, restrictions, 90-day penalties. Rehook. At this point, you've successfully bought your first stock, but now comes the hardest part, doing absolutely nothing. Step 7. The skill nobody talks about: expectation. Investing is about buying. Reality investing is mostly about waiting. Discuss emotional discipline, market volatility, news cycles, long-term thinking, powerful data point. Even though many investors are bearish short-term, most still plan to keep investing long-term. Core lesson: successful investors don't just understand markets, they understand themselves. Grand rehook/payoff. Remember the beginning of this video? Most people think investing is complicated because of financial jargon. Now you can see the truth. The challenge was never understanding stocks. The challenge was understanding the system that exists around stocks. Once you understand that system, buying your first share becomes surprisingly simple. CTA. If this video helped you understand what actually happens behind the buy button, subscribe for more deep dives that explain how the financial system really works. Not just what to buy, but how the entire machine operates. And if you're planning to buy your first stock soon, watch the next video where we'll break down exactly how to analyze a company in under 15 minutes using the same process professional investors use.